Hey everybody, welcome to the No Shill Zone. We are back Monday, 11 a.m. Eastern Time with Ben Cowen here. And as always, man, it's good to see you. How are you doing?
Good to see you too. I'm doing great. How about you?
Good, man. Good. I hope everyone had a good Thanksgiving if you celebrated out there. And turning our attentions to the market here, what's the kind of the number one thing you think that has kind of come across your radar in the last few days?
Well, I mean, I would say one of the interesting things that I haven't really looked at this in the past that much, and I don't really know how relevant it is, but inflation has been a hot topic this cycle, right? And I was thinking like last cycle, it wasn't really discussed nearly as much. Like no one really seemed to care about inflation. Why should they? Inflation was relatively low. But I thought it was interesting to look at Bitcoin divided by the inflation rate. Um,
Mm.
which is kind of a weird way to think about the market. I think like it's not something I've ever been interested in the past, but it's funny because history does tend to repeat itself. From the 2018 low, accounting for inflation, Bitcoin rallied about 490% from 2018 through 2019. And then even from here, from late 2022 to today, it's up about the same, like about 490%. So it's kind of interesting that like how this thing works. And I mean, like this metric could go up even if Bitcoin were to stay flat, right? And if inflation were to keep going down, which is probably what's going to happen. But I thought
Are
it was
you?
an interesting chart just to kind of put how, because I know like a lot of people look at 2019 and say that Bitcoin went up a lot more in 2019 than it did in 2023. But when
Yeah.
you account for this, it looks a little bit different.
Are you in the camp that we'll see the CPI data coming in? Because I think right now we're at like 3.2% on the CPI data,
Yeah,
somewhere in there, and then the PCE data I think is a little bit higher. But are you in the camp that we will see inflation getting back to 2%?
I'm in the camp. I mean, probably eventually. I don't know if it'll happen like next year or not, but
Yeah.
I mean, I would say I'm in the camp that it's more likely to trend down than up. That doesn't mean that we're not going to get occasional moves back up to the upside, right? Even inflation year over year, we saw, got a little bit of a bounce here. And
Right.
and I remember, back over here in August or September saying like it has gotten a bounce, but it should start to roll over. And this was back when oil was rallying, right? This was back when oil was rallying, and a lot of people thought it was going to keep going higher. But it has started to roll over again. I think there are some elements of demand slowly falling off, you know.
Mhm.
But I mean, look, the path to 2% it's a stochastic process. Like we're not going to go there in a straight line. We could bounce back up, to a higher level before going back down. I think it ultimately depends on, and I'm curious what your thoughts on this. Do you think that 5.5% is sufficiently restrictive? I guess that's the question. Like, is it above our star? Is it will the economy contract here? Will it expand? I guess that's probably the underlying question as to whether inflation's under control.
Yeah, so I do think it's probably sufficiently restrictive. Now, historically, as we know, I mean, interest rates in the 80s were 20, close to 20%, if not even above that. And so, I mean, that you have to look at that in a different time period, right? That was in a period where inflation was obviously very elevated, like it got to where we are now, but also we were much more used to higher interest rates, right? We're coming, I always think it's the velocity of the move and from where you start. So you were coming off of zero interest rates essentially, and you raise it to 5.5. That's a huge percentage move. I mean, taking it from let's say 25 basis points all the way up there, versus when you look at the 70s and 80s, where was interest rates at that point, and how much did it go up? So I do think that it probably is sufficiently restrictive. I also think that my biggest concern remains that inflation is not going to really get below that 2% level, and the Fed will ultimately be forced to cut rates, when we're, let's say, at 3 or 2.5%, which my concern is, does it put us in this cycle of just, like getting inflation down a little bit and then having to cut to stimulate, and then we see a jump in inflation, and then, restrictive again, but it just never quite gets down to the previous level where we've been at. So, I don't know if have any thoughts on that, but
Kind
yeah,
of like over here, right in the 70s, like
right.
this is just, yeah. I mean, like normally interest rates go above where headline inflation is, and you can see that we're above it now.
Yep.
Um, So, but yeah, I mean, that would be, I think that's really what Powell would like to avoid, but I wonder with an election year coming up, there probably will be some political pressure, right?
Yeah.
To not necessarily cut back down to zero, which I don't think they're going to do right anytime soon, but to just take the foot off the gas a little bit. I wouldn't be that surprised to see them do that in 2024, just to provide, a little bit more, or basically go back to conditions that are a little bit more accommodative for smaller businesses.
Yeah, and I think that's what we've seen in the stock market. I mean, just flipping over to my chart here, this is the S&P chart. I mean, the rally that we've seen in the S&P, I mean, it's been one for the ages in that historically we haven't seen very many moves. I think the S&P in November is up over 11%. NASDAQ is close to 15%. So it's been a huge move up as all of a sudden we're really getting that interpretation that the Fed is done hiking and may actually start lowering by next year. And I think the Fed is pricing in, or the Fed fund futures, like right around mid-year, if I remember correctly, right? So again, it's the markets love that idea of weaker economic or restrictions, and giving the market and investors that hope. And that's what's driven the market up. But I think it's important, and you and I have both mentioned this before, that usually the stock market, or usually a recession, occurs with the uninversion. And also when the Fed actually cuts rates historically is when we actually see downside in the market.
Yeah, because I think the challenging part is, how do we go to lower interest rates without some other thing happening, right? And I guess it depends on, like, if you think about who the people that are in power, they want several different things, right? Yes, you want the stock market to be doing well, right? No, I mean, you don't want to go into an election where the stock market is down, a lot, but you also don't want to go into it with, food and energy prices soaring either, right?
Right.
So you kind of have to pick one or the other, right? You kind of pick, do you want lower asset prices, like, for stocks and that sort of stuff, or do you want to focus on these everyday living expenses and I mean, recently things have been falling, at least in some sectors. But you're
Yeah,
right.
yeah. I think it's been very helpful to have, gasoline and oil coming down pretty sharply. I think for everyday folk, that's really, really important. It kind of is a tax that is coming down. I think it's one of the inflation gauges that I think people notice the most, right? It's if you
Right.
got to fill up your car every time you're filling up, it's right in front of you. Was it higher or lower last fill up? And that kind of shows, you where it's going. So I think that's very, very important.
Yeah, and here's an interesting chart. This shows like days after inversion of the 3-month and the 10-year. And we've never seen a streak, at least going back to the early 1960s, we've never seen a streak quite this long.
Mm.
There would have been streaks this long, back in like the 70s, but there were brief periods where it would like uninvert for like a day or two and then completely reset the count. So I do wonder if you could get something where you get like an uninversion because, I don't know, let's say the unemployment rate comes in at a higher level than the market is expecting, and then the market immediately prices in, rate cuts. But then the
Mhm.
Fed says, sorry, we can't do that yet. And then we keep
Yeah.
kind of going back and forth. But it's an interesting path to go down. I think maybe it'd be interesting to pivot over, because I know that last week there's a lot of hype, right? I mean, so if we rewind the clock 2 to 3 weeks ago, I know you were at least short-term bullish on some altcoins. But then
Yep.
last week you came on and said you were actually, thinking they were due for a pullback. It seems like we got that, right? It seems like we're in the middle of a pullback. We've had a pullback. What are you looking at right now with respect to the altcoin market in the short term?
Yeah, so at least in terms of coins, right? So I did cover a few of my shorts. I'm kind of a trader where, when I accumulate shorts or longs, when I exit, I don't exit everything at once. And essentially it's the same idea of dollar cost averaging in, I dollar cost average out, just with, if I have 10 coins short, I'll take 2 off the table, wait a few days, let the others go in the money further, take 2 more off the table. So I think, like, for instance, I was able to unload some good plays here. Let me just bring this back up. If we look at Solana, I'm still short. What I'm looking for on this is if it breaches this 5150 level, then this should really have a move down to 47. And if that breaks, you could be looking at $40. I'd probably be almost interested in maybe picking it up for a bounce around that 40 Pierce on the chart. But I continue to think that you put in short-term highs. I think we talked about the Bitcoin dominance chart and how powerful this chart is, where we just keep seeing the same pattern over and over. Big move up, consolidation, breakout, retrace to that former pivot high here, right here, and then it goes up. Breakout, retrace to the former pivot, and then Bitcoin dominance begins to inch up. So I've actually used the Bitcoin dominance chart to trade altcoins based on that, right? It makes sense where if you see that Bitcoin dominance is going to go up, well, you probably can short the move in the altcoins. And so yeah, I'm still short some. I have taken a little bit off the table, but I continue to think that the altcoins probably see a bigger pullback than they have thus far. Some of the runs have just been incredible. I mean, whether it's Avalanche or whether it's Solana, you'd see Avalanche is falling here. By the way, just watching at a level, see this pivot low right here. That's your level. If that violates, meaning you get below $19, you probably have a move to 16 in Avalanche. And so again, whether or not it gets down and violates that level, I don't know. It's just a technical level there that's very obvious to kind of track, where if it does get below, you should see a bigger dump out in some of these coins.
See, I think I do a really similar thing with regards to the dominance, but on a much like a larger time frame than you do it on. Like for the dominance, like if you're expecting a short-term pullback in it, then for you, that means you want to go long altcoins in the short term just to scalp some of those profits, right? If you think it's going to pull back, you're more likely to do the reverse. Whereas, this is the dominance excluding stable coins. And, like as a more like long-term person where I don't focus as much on the short term, probably because I wouldn't be that successful at doing it. But, from like the longer, view, I look at these sorts of charts to try to inform whether whatever I have in crypto should be focused more on like Bitcoin or altcoins, right? Should I be at like 60% Bitcoin in my portfolio, or should I be at like 95, 98% Bitcoin in my portfolio? And, for like the last couple of years, I've still trended towards a Bitcoin heavy crypto portfolio, basically just because like I look at this chart and I'm like, the trend, it has never changed, right? It's always been a series of higher lows and higher highs ever since May of 2021. And until that changes, it's sort of like catching a falling knife, right? With all Bitcoin pairs, we don't know exactly how low they're going to go, but every single time Bitcoin dominance puts in one of these local tops, more people start to speculate that'll be the end of it. And eventually it will be, but history also shows that you need looser monetary policy to get there.
Yeah. It always, I know you can appreciate it, but I always have to chuckle with, some of these, whether they're crypto traders or whatnot, but I mean, they get so excited about these moves and they're like, oh yeah, Avalanche or Solana or this or that. And it's like, yeah, but it's like saying, okay, my portfolio was $10,000. I was invested in altcoins. It's now worth $1,000. And I made back it. My portfolio bounced back to 2,000. It's like, and they're rah-rahing like it's the greatest thing. And I'm like, dude, but you do understand you're still down 80% from those highs, right? I mean, it's it's nice that it bounced, but it's not like a new bull market yet. Like let's wait and see these kind of moves, because I think that's the biggest issue. Is like when we talk about a new bull market for Bitcoin, we almost always are like, okay, new all-time highs. But like, what type of bull market has to occur in altcoins for some of these to take out their all-time highs? I mean, is that even possible?
Yeah, I feel like there's always some altcoins from prior cycles that go put in new highs. Like we've seen that before. I think the thing is like it just goes to show you, by understanding like sort of the dominance chart, it tells you like if you're going to put your money in crypto, if you focus on Bitcoin, right, you're much more likely to do well over the long term. Yeah, like Avalanche is back up to $22, Solana's back up. Cardano has had a nice move back recently up to around 40 cents or so. Yes, like some of these altcoins have made some nice moves recently, but for a lot of people, like they're still nowhere near where they need to be break even, right?
Right.
Because I think a lot more people with Bitcoin are break even at this point, if not in the money, as long as they stuck with that one. And I think we're probably going, I could be wrong about the timing, but I think we're probably going to get one more rally by Bitcoin dominance before the end of the year. This basically just shows dominance excluding stables compared to the average of the last two pre-halving years. And also, it's not just looking at the last pre-halving years. It's also we're still in tighter monetary policy, right? We're going into that, probably the end game of that. I wouldn't be surprised to see this, sort of come back up, just like it did over here, right? Just like we did a couple of months ago, we saw this dominance rally. I think we're probably going to get one more before the end of the year. And the reason why that is relevant is because if you look at dominance in halving years, like 2016 and 2020, excluding stables, you can see while in both prior halving years, dominance did go above the yearly open, it did not go that much more above it, right?
Right.
So, and it's interesting because again, like going back to this whole Fed pivot idea, it would be interesting if the unemployment rate started to print high. Like, let's say the unemployment rate started to print in the 4s, maybe the Fed will pivot before May and give the reason, give Bitcoin dominance the reason, to top out in the next couple of months or so. But we'll see.
Yeah, and I also think, at least looking at data, right? We got new home sales this morning at 10 a.m. That was weaker than expected. We got I think the Dallas manufacturing index was weaker than expected. So I mean, the market continues to see economic news that's weaker. Interestingly enough, that every time these weaker data points come out, the stock market rallies because again, it's the market being like, oh, it's weaker data, so the Fed is more likely to pivot sooner. Eventually, I think everyone should understand that changes. Now, one thing I want to just mention, you just brought up one more rally in Bitcoin dominance. On a technical basis, looking at the chart, I also think that is a possibility. Here is a wedge pattern. You can, multiple ways to describe it, but ultimately we have a trend line here that Bitcoin's been following amazingly well. And then we have a flat top, right? Now, this pattern formation, if you looked at 100 of these, 1,000 of these, about 80% of them break to the upside. When you have a flat top rising, the rising one eventually squeezes, and usually you get a break up. Interestingly enough, you said by year end, if we look at these two lines, they converge on December 18th, which means that by December 18th, Bitcoin either has to break out or break down. Probability-wise is it should break out. And so, again, that would imply that Bitcoin dominance, if it breaks out, would probably go up like you were saying as well. So by the way, I always love that, how you look at things in a different way, but like we come to the same conclusion with different methods. And that's very cool.
What's also interesting too, is if it's sort of a fake out, like let's say would you say 80% of the time it breaks to the upside?
Yeah.
If it were to break to the downside instead, I still would think dominance would go up even in that scenario, because basically Bitcoin leads the party, right? Like Bitcoin leads the bull run. And if we're not there yet and Bitcoin goes back down, who knows what the reason would be? I mean, it could be related to all sorts of things, but if it doesn't break to the upside, I would still argue that Bitcoin dominance would go up just because there's more inherent risk in the altcoin market under that
yeah.
scenario.
And I think you're dead on there, where if Bitcoin broke down out of this, that would cause panic within Bitcoin that would then be multiplied over the altcoins, which a lot of them have rallied 200-300%. So, I mean, you have people in these things that are already very extended. They see Bitcoin breaking down. Well, why is Bitcoin breaking down? The thought process will be like, is the ETF going to be rejected? Like people's minds tend to get crazy, and it makes them panic and sell the higher risk type stuff. So I agree with you. I think either way, dominance, it makes sense that dominance would go up.
Right. What are your views on the stock market? I mean, the stock market has, as you said earlier, right? I mean, 11%, what, in a couple of weeks or so? That's not something we get that frequently.
No, it's not. In fact, this is the NASDAQ, by the way, and from October 26th, from peak to trough, 14.5%. So again, that is an incredible move higher on a straight line. Today, we're basically flat on the NASDAQ, slightly down on the S&P. Volume is ridiculously light. Anytime you get around the Thanksgiving holiday or Christmas, New Year's, volume just dries up. But I'm still in the camp where, for me at least, I think that it's a issue where the markets ultimately are going to turn down based on past cycles, even going back to the .com era. I was just showing this chart in the .com era here. In fact, let's go back to that period. And we're having the secondary move up. But if you look at the .com high, right, we had this major .com rally, much like the COVID rally. And I think it's so fascinating how different factors cause the same reaction, because it causes greed in investors. And here was .com, and you could almost match this, tick for tick to what we've seen since COVID. Then you had the big pullback in the .com era, and then we had an up move, which is like the up move that we had leading up to the last few months. Then we had this pullback where people are like, oh, here we go. Here's the big sell-off. and then it pushes up one more time, and it kind of makes people say, oh, wait a minute, maybe we are going back to the all-time high. It's kind of like the epitome of the complacency, and then the bigger move comes down. And that's, if we go to the current period on the NASDAQ here, it's almost identical, right? So what we look at here, here's that big run up, here's your pullback, here's that big bounce, pullback, and then here's that second pivot high right up to that same level, right? That little mini double top. And the idea is, if we follow the same track as we have been from the dot-com era, the stock market eventually rolls over significantly. So just little things like that. Again, I'm in the camp that I think that the lag in monetary policy will hit all of a sudden. I think historically, if you look at it, like even if you look at 08, 07 to 08, the economic data was good, then a little bit weaker, and then it fell off a cliff, right? And I think that that's something that I'm expecting for us to see as well, is once the dam breaks, things are going to get bad real fast in the employment arena.
There's been a lot of things recently that I think had, they had been short-term bullish for the stock market, because I think we've previously talked about sort of pre-election year averages, right? You get a Q3 correction, 5 to 10% correction in the stock market, and then it normally trends up into the end of the year, right? In pre-election years, right? We tend to see that, I guess they call, sort of the Santa rally idea. But there's also been a couple of other things that I think were, that had been bullish for stocks. And one of them was, and could still continue to be, and that is the, the market finally sniffing out a Fed pause, right? I mean, look, the summary of economic projections, the SEP from a meeting or two ago, a couple meetings ago, they were saying we were going to get another rate hike this year. But then at the last meeting, when Powell was asked about it, I mean, he clearly, I feel like they have no intention on hiking again this year, right?
I don't think so either.
I think the market, doesn't think so either. I mean, I think the market is looking at, like, the ISM, PMI stuff, the unemployment rate slowly tracking from 3.4 to 3.9, and they're like, you're not going to raise again. So I think that has been something, right? Because I think a lot of times the S&P can rally like 10, 20, 25% even after you get a Fed pause, right? After you get a Fed pause. And I think the average time of a Fed pause is about 8 months, which would take us, I think, out to March, if I'm not mistaken. And then the other thing was that Yellen, just a few weeks ago, she issued shorter duration. The market was not expecting that. They were expecting longer duration. I think that took some of the pressure, some of the selling pressure off. Like, it helped the 10-year yield, the 30-year yield come back down. And that took some of the pressure off the stock market as well. So you sort of have these three different things happening all at the same time. And it's been a good for stocks in the short term. But yeah, I guess the question is what happens in 2024? Do the rate effects finally start to hit the economy? And we've been in an inverted yield curve for what, a year and a half now, almost. That tends to be about the window where you have to, start to be on alert.
Yeah, I agree. I think that's what I've been noticing, is that the duration of the inversion is now getting towards that end of it, where you usually see the uninversion, which then triggers, or doesn't really trigger, but it's probably a result of the impending recession that is coming through. So yeah, I think that's a really good point on that. I'm trying to think, a couple charts that I'd love to show here, just real quick. We have the gold chart. So gold continues to be strong. We have the downsloping channel, the breakout, the pullback, and now we're retesting these short-term highs. We're really very close to the all-time highs, which, again, inverse head and shoulder pattern has me with a target for 2024 of around $2,500. So pretty cool chart there. And then even silver has broken out in the near term here, downsloping trend line here, breakout. It will have some resistance just above $25 per ounce, but to be honest, the price action on silver has been really good lately as well. So the metals are looking good. We know Bitcoin is holding up relatively well here. The dollar continues to look semi-weak to me. If we look at the DXY, right, we broke down below some technical support here. I think the dollar continues to track lower until we get to about 101.60 here, this longer term trend line going back to 2021, pivot low to pivot low. That's probably your next big stopping point. There's also a pivot down here, which is right around that same level here with these lows. So this is going to be a lot of support, but there's really not major support until we get there. So a weaker dollar should be good for gold, silver, commodity in general, maybe Bitcoin, although Bitcoin, again, I don't think tracks quite as accurately here.
I'm curious. My background is nuclear. engineering, and like I've always had like a position in like uranium, that sort of stuff. What's your view on uranium? From just
Yeah,
not from like a fundamental perspective, just from like a technical. Do you have a technical view on it? I don't know if you how closely you track it.
yeah. So I do watch uranium here. Let's bring up this URA, which is the Global X Uranium ETF.
Yeah.
And one of the things that I love to show is you had this wedge pattern here that actually ended up breaking out. And then we've tracked these. Look, I mean, like literally this high here was this high. You've pulled back. Now you've broken out above that, which technically to me means you're probably heading up to this previous high, right? Just like
Right.
Bitcoin dominance, it hits, retraces, breaks the next one, and then usually goes up there. Then it'll retrace back to this one at some point in the future. But overall, yeah, I mean, from a technical standpoint, it looks good. I mean, it's a little extended. I'm not a big chaser, meaning that I wouldn't be
Yeah.
a buyer here myself. I'd wait for it to kind of either
Sure.
make a move up and then retrace or pull back and find a better entry level. But I love the synergies of charts, whether it's Bitcoin or this chart or other charts, how you just see the patterns repeating over and over again. And they don't always work out the same way, but a majority of the time they do.
Yeah, I mean, because like for the longest time, really through like maybe mid 2022 or something, like I always had like less than like just a few percent of my portfolio in precious metals, but I've kind of doubled that up over the last, I don't know, 12 months or so, just because it sort of seems like we could be going into a period where things like gold and silver and that sort of stuff start to outperform for a little while. And you showed the gold chart. I mean, how many times can we knock on the door before the door
Right.
finally opens, right? I mean,
And
this
that's
is
that's exactly it. Is that so based on technicals is number one, you have a pivot to pivot. So you've now hit it 3 times. If you look at trend lines like this historically, the data shows that the fourth to the fifth hit is the breakout hit, right? And so this, if we go up there, that would be the fourth hit. So it's very possible you'd hit it, have a small check back, and then break out. But this is a very common thing of when you hit a trend line. The first time it just forms. The second time it hits, it works beautifully. The third time, it's a weaker line, but it still holds. Fourth to fifth hit is a majority of the time where you get your break out or break down. And so again, we are coming up to the fourth hit of that line, fourth time we've been up there.
Yeah, I mean, it just seems like it's been a slow grind higher for a long time, and these shakeouts that we've had, I think they sort of shake people out of the market to think that, all right, well, that's it, and then it just finds a higher low and keeps going up.
And I think, one of the things I harp on, and this isn't technical, it's just purely fundamental. But, if you look at the data from central banks globally, they've been buying gold hand over fist. And it's like, to me, you have to almost chuckle at the fact that these are the guys that, and girls, I should say both, but they're the ones that have their finger on the printing presses, right? Where they can print trillions of dollars at their whim. If they're buying gold like crazy and buying metals like crazy, it probably tells us something, right? I mean, it's not hard to extrapolate the ultimate end result there out.
Yeah, I mean, it just seems like it's a matter of time, but I do think there's a case to be made that a lot of investors today, if it's not happening today, then they just think it's not happening. Whereas it could just be like, with things like precious metals. I mean, the bull markets in precious metals, they take years, like 5-10
Yeah.
years to play out.
Yeah. And I think part of it too is that, like, especially crypto investors, it's very hard for them to say oh, in the next couple of years, or let's say next year we hit 2,500. In their heads, they're like, wait, so that's only a 25% return. I'm used to 1,000% or 500% returns in the crypto markets. Oh, so screw gold. It's like an old people's in investment. But my counter to that is, yeah, it certainly doesn't move that fast, but there's a quality of safety that comes along with it. And granted, when you only have a $5,000 account, I totally get how it's not sexy to make 25% a year on $5,000. But again, as people's wealth builds, you have to start saying, okay, how do I preserve my wealth? And this is kind of the thought of Bitcoin dominance too, is like,
Exactly.
it is the gold of crypto, right? It's the safest one of all the cryptos, and I think there's something to be said for safety and preserving capital plus growth.
Yeah, I think there's a difference between like wealth preservation mode and wealth creation mode. And I've said that for years. I'm like, guys, if you want to go into wealth creation mode, that's where you go to the altcoin market, right? Like that's wealth creation. Like you can afford, if you have a small portfolio, you can afford to lose, a small amount in the hopes that you strike, that you hit it big, right? But if you're in wealth creation mode, or sorry, if you're in wealth preservation mode, and you have like a fascination with cryptocurrency, like, I mean, we both like crypto, then Bitcoin kind of protects you, right, against the increasing volatility of the altcoin market. So that was more or less, I think, the point. And the last chart I wanted to show before I guess we should wrap it up was I showed the 3-month and the 10-year. This is the days after inversion of the 10-year and the 2-year. So while we're currently at day 348, by the way, this does not count like weekends and holidays or anything like that. But you can see we're at 348. We did go, there was one time in history where we actually saw it inverted a little bit longer, and that was back in the early 1980s. And we went up to a little over 400 days. So, a few months away from where we currently are to set a new record there. But anyways, maybe we should go ahead and wrap it up there. We've been going for about 30 minutes. Guys, if you're not subscribed to Gareth, make sure you do so. He's got a great, not only YouTube channel, he also posts a lot on Twitter. He's got a great service too, In the Money Stocks. Make sure you guys check that out. Links to all his stuff are, as always, in the description below.
Yeah, and same thing, guys. I know Ben's running a Cyber Monday deal. Check that out on his website, and his socials are below. We thank you guys for tuning in as always, guys. It's awesome to have you guys tuning in, and love the comments, the kind words. Have a wonderful rest of your day. We'll see you next week. Take care.